Hello, and welcome to the How2Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. Hi, and welcome to the How2Exit podcast. Today I'm here with Jacob George. Jacob is a strategic advisor and investment banker, founder of George & Company Investment Bank that's headquartered in New York City. With a strong global presence and experience in executing cross-border transactions, George & Company provides clients access to a global platform to acquire companies, divest assets, or raise capital. George & Company has experience advising companies in the technology, software, aerospace, defense, uh, industrials, healthcare, technology, and food and beverage sectors. Welcome, and thank you for being on the show, Jacob. I'm really glad to have you here today.
Thank you so much, sir. Really appreciate the opportunity to be on your show. I'm looking forward to our conversation.
I think I just set a new milestone. I think I got your name right,
You did.
and
You did.
I didn't butcher something in the intro. I actually got through it pretty smooth. I think there was one hiccup there. So
You're good. You're
I
good.
I always joke around. You're getting if you're watching this, you're getting a live raw and cut. I don't believe in editing anything too much. I just want to give organic conversations with people. Um, with that, let's just start with kind of your origin story. I like to joke around and say, hey, you were born, and then someday you ended up here with me on a mergers and acquisitions podcast. How did you end up here?
Had an interesting path. My family, especially my dad, is very much an engineering person. Grew up wanting to be an engineer, right? And then went to a magnet school for electrical and computer engineering. And somewhere I would say, sometime in high school, I was like, wow, I really don't see myself doing this for the rest of my life. I love technology. I love creating new ideas, but I don't see myself being an engineer for the rest of my life, right? And I, on a whim, I said, you know what, I'm going to do pre-med. I'm going to go to med school. That didn't work out so well. A 2.6 GPA in my first year of med school, and I was like, you know what, this is probably not for me. I don't think people really want me treating them. So I says, okay, I'll switch to finance. And the motivation to go into finance was really simple. I liked investing in stocks, right? I would sit next to my dad. My dad would be, working on his retirement fund, and I just liked investing into stocks, and it was that simple, right? That's why I went into finance. Had zero clue about the different areas of finance, corporate finance, investment banking, equity research. I knew none of that at all, right? I just wanted to do stocks, and then my brother who's 2 years younger than me. He gets to college, goes into finance, watches a movie called Wall Street Money Never Sleeps, and he comes home and is like, "Man, I want to be an investment banker," right? And I was like, "Okay, cool." What does that mean? And then I remember I was doing a lot of research, and I was like, "This is really, really cool," right? And one of the things at that point that happened was that I realized I was still very passionate about technology, and um, at the same time, I was very passionate about finance and deal making. And I found that M&A or investment banking was a way for me to bring both those worlds together. And I, I went into investment banking. I'm from New Jersey. I was born in New Jersey. Grew up my entire life here. Went to Seton Hall University, Big E school, and so not a target, right, for investment banking. Not at all. I was not heavily recruited for the Big Four or anything like that. I had to network and fight my way into Wall Street. And once again, that intersection of technology and investment banking came into play. I remember I found a list of A to Z investment banks, boutique investment banks in New York City. I started calling them one by one, and I get down to a firm, the B's, and they do process control and test and measurement and technology stuff that I grew up doing. And I picked up, and I didn't say I was a finance student. I said, hey, I am a finance student, but I've done process control. I wrote software. I developed hardware. And he was like, oh, wow. And invited me in for an interview and ended up working there for a few years, all based on the fact that I understood technology. It was less about investment banking, right? And then as I got a little bit older, I realized that I wanted to be more in charge of my deal process. I wanted to source deals. I wanted to manage the entire M&A process, and I wanted to negotiate and I wanted to be a big part of the M&A strategy. And I decided to start George Plus Company, and here we are. It's been 5 years, and we're growing, and I'm excited about where we're going as an organization.
Awesome. Now, you say on your description, you guys do a lot of stuff with international.
Mhm.
Um, I know we talked before the show. You're also very into sustainability, and that's a very hot topic right now. How does that come into play in the mergers and acquisitions space?
So, um, Ron, sustainability is just being thrown around, right?
Hmm.
The S in ESG, right? And we are seeing now that the financial world, the investment world, has largely trended towards, I would say, putting a premium on companies that are sustainable. Now, I am by no means an expert in sustainability, right? I simply know of it from a strategic standpoint. Companies that are sustainable demand a premium. And I think that is irrespective of politics, right? I believe whether there's a Republican in the White House or whether there's a Democrat in the White House, I think that this is now no longer a trend. I believe it's the way of life for most companies. And, you know, um, especially in the world that I work in, sustainability is actually probably a very, very big problem, um, because one, from the financial side, I believe that private equity investors, I believe family offices, institutional investors, the LPs that are funding private equity funds and GPs, they are now looking for sustainability metrics as part of their due diligence, right? And
So, before we go too deep into this, define what sustainability is in the concept of this. Is it just like if I produce coffee and I sell coffee pods, I use a reusable or a environmentally friendly um, container, or is it just buying carbon offsets or all of it?
it's a combination, right? So there are obviously the things that happen from a physical nature, right? Natural environmental things, that's one. And of course within your company as well, right? So your for example, lithium ion batteries, right? You can mine them in a very sustainable way, right? Or very unsustainable way, right? So as an organization, you have to think, you know, if I am not mining the lithium from my lithium ion batteries in my electric vehicle, how will I be perceived 5 or 10 years from now when it is a very important thing? That's really what it is about. Okay.
That's a very good example. If you've ever seen what those mines look, it's just
Mhm,
open like Grand Canyon in the ground.
mhm,
And you're, most mining in most countries, or at least here in the United States, has high requirements for restoring land back to a usable state.
mhm,
But some of these countries that, these guys are going out and buying the lithium for the batteries and other precious minerals don't necessarily have those. And I can see where sustainability is like, look, even if they don't have them, we're going to do what's right, you
mhm.
know. So,
You know what? The thing that I think you'll see is that industrials manufacturing technology hasn't caught up yet, right? So you go to Costco, right? And don't quote me on this, but I believe Costco, when they sell a piece of fish in Costco, it has to be sustainably produced, right? Whether it's farm raised or wild caught, it has to be sustainably produced. They're not going to buy fish from suppliers who go deplete resources in Southeast Asia, right? So it's food and beverage has been there for a while. They've focused on sustainability. I think industrials and manufacturing and technology just has not caught up yet.
do you think there's going to be like a stamp or something for products and food services and other stuff that shows you it's sustainably produced? Like, kind of like organic is, and it's here in the United States, if you stamp something organic, there's supposed to be some level of oversight to prove that it's organic.
Yeah.
Like, do you think there'll be some type of like national or international seal for this was done, environmentally responsible?
No, but I'll tell you where we're going. I think it was last week, the SEC came out and said that publicly traded companies are going to have to, within 60 or 90 days, speak about their ESG, their sustainability. They're going to have to report it on the 10K, right? So here we are. We pay millions of dollars as publicly traded companies to get our financial statements audited, right? you now need to put into your report that goes to the SEC along with your audited financial statements a report on your ESG, right?
Right.
So now
It's
what's going to happen is M&A is going to dictate that stamp of approval, right? So now I am the world's largest industrial corporation. Let's just pick, for example, Honeywell, right? I'm Honeywell. I'm in oil and gas technology very heavily, which is a problem in itself, right? And then, but now I'm making a small acquisition. I'm not talking about a big $200 million acquisition. I am buying a small technology company based out of the Northeast area or the Bay Area who is only worth about $5 million, but it's very critical to our growth going forward. But the key component in there is a rare earth mineral that is unsustainably produced somewhere else. They have to report that on their 10K, right? So I think now bigger corporations are going to start putting pressure on small to medium sized middle market businesses. Say, hey guys, I'm doing all this due diligence that we've done before on finance, accounting, sales, marketing, operations, legal, but you know what? Sustainability is important now,
So
right?
one of the things that brings up is for our typical audience, which is kind of the buying companies, acquisition entrepreneurs buying companies that are about 1 million in revenue, all the way up to about $20 million revenue.
Mhm,
We call ourselves acquisition entrepreneurs, and we kind of operate right under that
mhm,
uh, like where they're targeting. The
mhm.
private equity and strategic purchasers are looking because we're wanting to buy these and grow those into selling it to that customer base. Now, the issue that brings up for us is now we have to be concerned with that and have that in our deal room. How our sustainability, because anybody that's acquiring us that's larger public, potentially a strategic purchase where we're going to get our highest multiple, they're going to need to know that as part of their due diligence as buying us because they have to report it on their paperwork.
Let me paint this picture for you, right? So it's about 2 to 3 years from now. The SEC regulations now are in full effect, right? And you've got a technology company that was built out of a research university, right? So they started making a product, right? They probably don't have audited financial statements, their sales and marketing policies, proceed. Nothing is in place, right? The first thing in their mind when it comes to a due diligence or even maybe professionalizing their business is going, how can we get our policies for sales and marketing, finance and accounting, operations, legal and HR? None of them right now are thinking about ESG and sustainability, right? None of them. So it's going to be a shock when 2 to 3 years, maybe 5 years from now, you're ready to exit your business and you go, the due diligence team or the M&A team from some large multi-billion-dollar company comes and says, hey, what have you guys done in terms of ESG? They have no idea what that word means. They've got no scores, no metrics, no records, no nothing, right? And that's where we've been trying to build awareness of, what you guys need to start thinking about it now. I'm not saying that it's going to be easy to transform your business, but you should at least have a plan in place to make that transition into a sustainably compliant organization.
I see it starting to pop up here a lot. I know investors who I've worked with, that's what they're looking for. They're looking for that ESG component, or companies that do really well in that. Some of them refer to themselves investors in that space.
Mhm, mhm.
But you do some stuff internationally and help people do stuff internationally. Is there any countries that are like way ahead of us on this and they're really critical on it?
I would right off the bat, right, the European Union, right? I would say that when it comes to any aspect of ESG, right, when it comes to the governance and the social aspects of it and the environmental aspects, the European Union is in my opinion far ahead of everyone else. But I think it'd be important for us to discuss in a bit is what do we do about the additional cost that is incurred by having to transition your supply chain over to sustainably compliant components or inputs? But Europe is the leading place for such things.
The interesting thing inside of that is if you're running lean, like say you're in a commoditized product base
Mhm,
and you've been competing on price for a while, and now this movement comes forward
mhm,
and says, ESG is important and you have to have sustainable resources. It's kind of like I'm imagining that sustainable resources are, and I apologize for being a little bit ignorant on this subject, and I'm willing to admit that. But I imagine that they're like organic resources, meaning they're going to be a little bit more pricey. So you price yourself into a commodity, producing a commodity. You're competing on price because you're big enough to do that, and now you need to change your sourcing around to be something sustainable that very likely is going to come at a premium.
It is going to come at a premium, but I think it's very important for us to understand that this particular conversation is happening in a vacuum, right? We're talking about sustainability in a vacuum because people don't understand it, right? It hasn't gained full traction yet. Sustainability impacts a lot of things. It impacts your suppliers, it impacts your customers, it impacts the transportation and logistics surrounding your product, right? So you can't simply say, you know what, I want to be a sustainable company and do all these things. You might price yourself out of the market, right? Um, and you might cause a lot of damage to the um, total supply chain, right? And I think it's going to take time for that to build and come to a point where I think sustainably compliant products or services are close to what's traditionally been sold and provided.
I get that, and if you, I'm really kind of stuck on this topic of you know we're taking a shot. There's part of me that says there's a misalignment. Here's where I'm going with this. I guess there's a misalignment with consumer sentiment, like
Mhm.
this social economic component to where society needs it, at the consumer level. And I'm talking about at that commodity product consumer level, guys buying coffee on a daily basis that would never pay for a premium blend. Or they're not buying singles. Like there's a lot of stuff going on in coffee right now about being a single source,
Mhm.
being sustainable, treating the farmers right, all the different stuff that's in that
Mhm.
space. But you still have, I would say, the majority of the consumer market buying Folgers or something else off the shelf,
Mhm.
and they just don't care. They want to drink what they drink, and they want it to the most affordable price.
Right.
Uh, so how did I'm wondering when that shift's going to make, because I think before some of these commoditized products can really get into this,
Mhm.
the consumers just have to understand that, or buy into the story that this is important.
Yeah. It has to. You're 100% right. Right. It cannot be supply side driven. It has to be demand side driven. Right. Um, I believe that over the next, I think in the industrial markets it's a little different. I think people see the value of it because a lot of the components and um, inputs in manufacturing and industrial technology is rare as it is right now, right? So I think they're a little bit farther ahead. But on the consumer side, you're 100% right, sir. It the demand has to drive this shift, and I think that as more millennials grow up and their tastes are much different from my generation who grew up in the 90s and older than that. As they grow older, as they get purchasing power, and as they prefer these sort of sustainable products, I think you'll see the change happen in the consumer side of things. And I think that's at least 10 to 15 years off.
Yeah, it's interesting. I mean, we're all business owners. Everybody listen to this. We thrive on the consumerism, I guess you want to say. What's the word I'm looking for? Just our nature, especially here in the United States, that every problem has a
Mhm.
solution you can buy.
Mhm.
You know, to where there is a shift now where you know, of do it yourself, fix
Mhm.
things,
Mhm.
repair things. Don't just toss them away. But
Mhm.
uh, I'm 50. I just turned 50, and in my lifetime, it went from everything was single use throwaway. You know. I remember times growing up where my parents just didn't want to do dishes and bought, just because, like, anytime we had more than 5 or 10 people coming over for a barbecue, it was
Mhm.
we had the dishes for it. But there was paper plates and plastic
Yeah.
cups in the 90s, right? And
Yeah.
we went from that to, that's not so much okay anymore.
Yeah.
Um, I have a friend who said he went to a barbecue. He actually posted all over a lot. I went to a barbecue and they were using solo cups, and he was just so frustrated. He knows they know I'm an environmentalist. Why do they invite me? And I was like, okay, well, that's you, but there's more of that going on now. So I'm curious on this shift. and really curious on the international impact of it, just because we live in a very privileged state, in
Right.
the United States. The United States is just it's just a different beast of its own. We're pro consumer, we're pro business, and but you go to a lot of other countries, especially anything that I hate the phrase. I don't know a better phrase for it, like third world, low income countries, and where they're just trying to the businesses there. A lot of them are just trying to get by, and as this spreads, anything that happens here, anything that happens in Europe, eventually makes itself and kind of pressures the rest of the world to do it. I'm just curious on the impact to economies and environments where they're just doing their best right now to get by.
It's I wasn't born in India. I was born here in the United States, right? But I've had the chance to go back to India a number of times, and of course, my travels, my work allows me to travel quite a bit and see different areas of the globe. It's an interesting point you make, but I think that there is a solution for it, right? Um, I think that the world as a whole, yes, it's going to make a massive impact, right? Let's agree on that, right? This sort of sustainability shift is going to have a massive impact on the world around us, right? But there is an intersection there where I think that people really need to think critically about and put into action. One is that some of these poorer third world countries are very natural resource rich, right? We know that about India. We know that about Southeast Asia. We know that about Africa, right? And to be honest with you, even South America has some incredible natural resources, right? In these areas, there's a majority of the people are living very close to the poverty line, right? So I believe the world has to come together in some form or fashion and figure out how can we uplift the economic status of the people in these countries by allowing them to be manufacturers or producers of sustainable goods that now the first world countries can use, right? And
Yeah.
that would solve a lot of issues, I think.
I think I'm the rare business guy who just doesn't understand how can a diamond mine in South Africa be in a community where the people are barely making it, and that diamond mine is producing billions of dollars, and that's okay,
Like,
right? I just don't understand that in my realm. I get it. I understand it's the corporate greed, or whatever you want to call it. Um, greedy capitalist pig mentality. And I joke around and call myself a greedy capitalist pig, but I don't think I could do it. I don't think I could actually buy a diamond mine in a South African or wherever they happen to be community, and have essentially slave labor barely doing the work. It just does not make sense to me.
no, not at all.
And so I like the sustainability movement. I see it making a difference. I see that all of us as acquisition entrepreneurs need to at least be aware of what it is. And if you have intentions to ever sell one of your entities to a publicly traded, you're almost going to have to deal with it, right? And if you're going to ever want to get the highest value out of yours, you got to remember these strategic acquisitions and the publicly traded companies that are buying you.
Mhm.
Even some of these family offices, they're looking for this now. So the guys that would pay you the most, pretty much everything other than a sole operator,
Mhm.
is going to take a look and see how you handle the ESG side of the sustainability side of your business, and the environmental. So uh, uh, again, I'm going to display my ignorance. It's environmental, sustainability, and what's the G stand for?
Governance.
Governance.
By
Okay.
the way, it's actually, I believe it's environmental, social, and governance. And I believe sustainability is a piece of environmental.
Environmental. Okay. So I'll just admit that I
Sure.
don't know what the acronym was. I know what the concept is. Like I said, it's interesting. You said it's bigger in Europe because the two or three investors I was telling you about that, like they tell everybody they buy companies with ESG components, and that's what they're focused on. They're all in the UK,
Mhm.
right? They are in that area. They travel that area, and they're big on that. So I can see why, because they're ahead of us, probably 4 or 5 years. It sounds like.
Yeah, I
So
would. That's accurate. That's accurate. Yeah, they
so
actually, the European Union actually funds companies that are progressing on developing technologies for this area.
So let's go back to the international side of things, just because I haven't had anybody on the show that does a bunch. I've had Sebastian on here, which mentors doing international deals and stuff. But what are the differences between like cross border M&A and when you're going through the process from an investor's banker's point of view? what do you look at differently if I was going to buy a business and come to you and say, hey, I want to buy, I don't know, just throw something out there. I want to buy uh, 25 to 100 of this business in this industry, roll them up, and I'd like to work with you guys, then back me as a thing. What's the difference between doing that here in the United States and then me telling you, hey, I'm going to do 10 of them in the United States, 10 of them in Brazil, 10 of them in, Europe? Um, like, are there huge requirement differences as far as the due diligence and all the stuff that goes along that?
I would say that it's less about the due diligence, but more about the perception of the company in three key areas, right? Um, Culture, culture, culture. Listen, I can't stress this enough that each individual country has its own cultures, and sometimes that could be within the region itself, right? And I'll go back to Brazil because Brazil's been a place that I've worked in for a long time, and um, we have investors in Brazil who won't touch the rest of South America. And then I have investors who have spoken to alongside the coast, the border of Brazil, who won't touch Brazil. Why? Because of the massive cultural differences, right? Um, I've dealt with potential Asian acquirers before, and they are very slow. It's very methodical. It's very calculated, right? It's not just, hey, here, we're interested. Here's an offer. Let's buy the business. It takes 6 months sometimes to bring them around. Um, in India, they're going to negotiate hard, right? In Europe, the culture is a bit more punctual, on time. Americans in North America, I believe, we're a little more flexible when it comes to these sort of cultural things because of kind of the diversity we have, the diversity of thought we have in this country. But every country is different culturally, and when you go to do M&A in there, you must understand that culture first and get a plan to work through it. Okay.
It's interesting. Many years ago, before I even got into M&A, we were looking at buying a business in a tropical. I won't say where, just because laws have changed since then, and it was a very corrupt area. And I'm going to say something bad about the area, and it may not be even true anymore. But this was a kind of a resort we were looking at buying. We'd raised money for some investors. They said yes. We were starting to do the kind of due diligence on the. It was a very large kind of bread and breakfast type of resort. Matter of fact, when the cruise ship stopped nearby, the city would say, "Hey, if you want to stay in town, stay over here." And when I was reviewing their books, it was like there was a lot of stuff on the in there. Like, it was a considerable figure that was gifts and other expenses.
Mhm.
And so I got the owner on a private call and I said, "What is gifts and other expenses?" He goes, "Hey, we're in so and so. So it's a South American
Mhm.
island." And I was like, "Okay, yeah." He's like, "If you want to continue having the cruise ship bring their tours by and have, the cruise offer your like the resort actually had fishing guides. They had skiffs that could take people fishing on, like, in the reefs and stuff, catch barracuda and stuff. Anyway, it was a pretty good little business." And he said, "You got to pay this the local, the equivalent of a sheriff. They call him a constable or something like that, or a Spanish word that means that. But basically, the local sheriff and the local mayor basically got a monthly stipend of gifts from this resort." And that's because whenever there were city town councils or something, and they were like working deals out with the Carnival Cruise Lines or the other cruise lines that stopped at the one giant pier that's there for the cruises to stop, they would say, "What's on the island for the people to do?" They would pitch your stuff. So, like, if you wanted them to stay, so I was like, "Okay, you're bribing officials." "Oh, no, no, we don't call it bribes here.
Yeah.
That's just not, it's not a bribe. That's a negative thing. This is just how we do business here."
Right.
And there's a lot of cultures where gifting, as they called it, is culturally acceptable and normal. And to where us here, we would consider that, shady. Matter of fact, that wasn't the only shady thing that was going on, so I backed out of the deal.
Yeah.
But um, like, I didn't necessarily want to own a business to where I constantly, if they elect a new sheriff, I have to worry about how he's going to handle it and how much he wanted, and
Exactly.
all that. It was just a game I wasn't ready to play. Um, are those the cultural differences you're looking at, or is it just? I mean, that's just one of them, right?
That's just one of them, and um, it's really about how people are, right? It's about what makes them go, how they think about life, and it M&A, I would say, is 90% psychological and 10% technical, right?
I 100% agree.
You
And
know?
so many people miss the human side of this, right?
Mhm,
They go in and like, show me the numbers. I've had people like, hey, will you help me get on the first call? I'm just wanting to, I want to buy a business. Will you get on the first couple calls with me?
mhm,
Like, okay, I've done a few hundred of these calls by now. I'm comfortable.
mhm,
And I said, first thing I always tell them on the first call, it's just rapport.
mhm.
All we're trying to learn from the seller, unless there's a broker involved, and that changes the dynamics. But if we're talking directly to a business owner who's thinking about selling,
Mhm.
all we're wanting to do is figure out what their motivations are, build rapport with them, and figure out where they want to get. That's the first call, 35 to 45 minutes. Let's just figure out where they want to be. I've been scheduling for an hour, but I've shifted my mindset. That's just too much.
Mhm.
Um, what happens is when you're done out of building rapport and you figure out where they want to go and you
Right.
schedule for an hour, you start almost going into your pitch there and you're not ready to do that.
Mhm.
Um, but I would say most acquisition entrepreneurs operating, especially the new guys like myself that's only been doing this for 2.5 years, well, we're operating off of being trained by mentors, reading everything we get our hands on. Maybe we got some college education behind acquisitions and mergers, running a search fund and stuff. Then, but it's about like make sure the numbers are good, make sure the legal stuff's good. That's all needed. But if you don't have the human aspect of this done,
Right.
you're not getting to the other side of it. And I'm a firm believer that I did real estate for years all the time.
Mhm.
And somebody says like, well, how do you buy so many houses? I was like, I get to know the owners and work with them. I've had people sell me houses for five, six, $7,000 cheaper than the highest offer because they liked me. And I was, I sat down and listened to them and figured out what's going wrong and,
Right.
you know, help remove the fear and help them get to the next level where they want to go. And
Mhm.
my offer was cheaper than the others, but they chose me anyway. And
Yeah.
that happens constantly
Right.
in
Right.
the merger and acquisition space. I would say that most businesses under that's not publicly traded
Mhm.
that are say under the $15 million, $20 million revenue mark, I would say there's a majority of them that don't sell to the highest and best offer. They sell to the offer that meets the most needs of the sellers,
Right.
and
Exactly.
that includes like legacy,
Mhm.
cultural. Like, will you take care of my people? Will you
Yes.
take care of my brand, my name? Like, there's an ego attached to the business. There's an identity attached. A lot of entrepreneurs tie their identity to it. So, but I think a lot of us miss that. A lot of mergers and acquisitions, they jump right into
Yeah.
show me the numbers. I want to see if this is a profitable business.
Right. I for us, we because of the size of deals that we're working with and some of the engagements we have, I need to approach it as not not just hey, it's an asset, right? It's human capital, right? And I have to have a personal connection with the person, and I try to make it a point in the way that I conduct myself and my organization conducts itself that that there is empathy, right? There's compassion, there's an understanding of their issues, and there's two ways I address it. If it's an older owner, right, who's looking to exit, it's pretty clear cut, right? He wants to exit the business fully. A lot of the times, he's made emotional attachment with his employees and the location. So we ask him, "What are your concerns around these things?" Right? What do you want me to prioritize in the M&A process with the perspective acquired when it comes to these things, right? And secondly, when it comes to key employees in the organization, almost immediately, right off the start, we're asking them, "Hey, what do we need to do for you in this deal?" Right? You're critical to this deal getting completed. The new owners or the new acquirers are going to want to know that you're engaged. What do you want? What's going to make it worthwhile for you? What's going to make you happy? And also, how do you want your career to look? So we go through a couple of these things to build that relationship and build that connection. And I see that it really does help the deal quite a bit.
I get it. And if you miss that component,
Hmm.
I'm a big believer. Like, nobody cares what you know until they know you care. And I know that's don't quote me on that. I've read so many books. I stole it from something I've read or heard.
Hmm.
But I really believe that. I really believe that until you've built that rapport, that bond, people trust you. And trust is made through communication most of the time,
Yeah.
right? It can be made over years and it can be destroyed in minutes, but you can start building rapport on call one just by, listening. I don't know if you had a chance to catch it, but I actually had one of the coaches from the Black Swan Group, Never Split the Difference, and they talk about tactical empathy and rapport building. And if you look at like how they diffuse
Mm.
You think about it, most of the guys in the Black Swan group, the coaches, were actually FBI hostage negotiators to start with. So the guy I had on the call, Derek, was an FBI and the hostage negotiator. And if you think about it, what he's selling is you want to get out and be free, and I'm selling you 20 years in jail. And they
Hmm.
have a 90 something percent success rate. And I asked him about that, like, how does that true? And he says, rapport. We get in, we listen more than we speak. We figure out what they're trying to get to, and then we show them a path that keeps them alive, and usually that ends up in 10 or 20 years in prison. So
Hmm.
I don't know that I could sell 20 years in prison to somebody who's desperately trying to do something else.
Hmm.
So I really think we ought to lean into, like, how do they do that? How do they pull out, work on that, and how can we apply that inside of other aspects of business? And it really comes down to the human aspect of it, the understanding where that person is trying to get, having them felt heard and understood, and then coming up with a solution that makes sense for both parties.
Hmm. Is absolutely, absolutely.
So if somebody was wanting, like, and I operate in a space where we do a lot of situations where we're trying to get the owners to owner finance, where I've got investors and stuff like that that'll tie money with mine and help me put in things. I've also got other ways to do this, but I've never actually went the investment bank route. And a lot of the guys listening here probably do the same thing. What is the route to approach an investment bank and say, here's a project I've got, here's what we're trying to do?
Mhm.
What type of deals do you want to fund? What are you looking for?
So let me go to step back and let me go to the first part of that, right? And how do you approach an investment bank, right? And I would say that I think you should interview investment banks, right? Um, I think that the investment bank and the potential client should be on equal footing, and I really believe that you should explore whether or not the investment bank is a subject matter expert on the area that you work in. Okay, um, and I, that's number one, right? Two is, do they have sort of consider does the investment bank have consideration for the not the intangible things like key employees, keeping the employees, the location, personal wishes and desires and dreams and legacy, right? If you've got a good industry fit, and then if you've got a good sort of intangibles, they handle all the intangibles well, then I would say you should proceed with working with that organization. Do not prioritize some sort of evaluation that they gave you, okay? Because I'll be very honest with you, there's I can pick a number that is higher than any other valuation out there, and I can defend that number to death, right? And I think that secondly, they can also tell you that we'll do it in X amount of time, right? And it doesn't matter, right? An M&A deal is going to take the quickest it will take is probably 45 to 60 days, right? Nothing shorter. And the longest it takes is 9 months. Now, and I said, don't pick an investment bank on what they tell you about valuation and timeline.
Yeah, I know a lot of people are like, I need this. The seller thinks he needs to sell within 90 days. He's got a medical issue or a retirement. I can't go down the investment bank. That takes 12 to 24 weeks. And I was like, it's not necessarily true. You should probably call more investment banks. There's somebody out there. I'm a big believer. I don't know if I'll ever have him on the show just because of his mouth, but I like Dan. I think named Pina or whatever. He's on YouTube a lot. He cusses crazy. But
Mm.
one of the things he said is there's always somebody out there with the money that'll believe in your project. And he's much. I'm very very much paraphrasing this. I'm dropping all the four-lettered words
Yeah.
out and a lot of the vulgarness out of it. But basically, he says if you've got a concept and it's valid, somebody out there will fund it. You know, so I believe that. And like I said, I've never ventured into the investment banks, the realm. So if what would we bring to you? What would be if I came to you today and said, "Here's a project I want to work on. Does this excite you at all?"
Now, do you mean for us as George Plus Company, or you mean generally the investment banking
Let's
world?
start with you, and we'll go over, like, what do you think? You know the industry a little bit. So,
Right.
like, what would you require? How do you find your deals? You source them yourself, and you go out and find somebody and say, "Hey, I'd like to work with you," or do you
Yes.
have people coming to you?
So we have a bit of both
Okay.
because we're still a young organization. A lot of it is external business development. We are targeting companies that have some that are mainly industrials, manufacturing, technology, right? But have something unique to it. For example, I don't necessarily want to represent a company that makes copper fittings, right? That gets sold for the millions at Home Depot, right? That's yes, it's technology, but it's commodity based technology, right? Um, the line I draw is, do you have something unique, a unique value proposition, whether that be your knowledge base or your end applications? It doesn't have to be patents and trade secrets and intellectual property. It can just be that I know how to do something better than someone else, right? That's where we draw the line. We want to work with technology companies, whether that be soft or hard technology, where there is some unique value proposition when it comes to the core product, right? So that's number one. Secondly, uh, I don't care about region. You can come to me from any region and I'll take it on. I don't care about revenue so much. I would say, 1 million, like you said, 1 million and up. I'll start looking at it. Sub 1 million is really difficult for me. Honestly, sub two is probably difficult for me. Two and up, we can start working on it. Um, Third, profitability is important, but it depends on what type of company you are, right? So if you are a company that's generating 2 million in revenue and you have negative profitability because you're plowing all your cash into new development, I'm good, right? But if your company is 3 to 5 years old and you've been doing 2 million every year and you have negative profitability because your gross margins are below 50% or 40%, then I'm probably not going to touch it, right? So those are kind of the metrics that I look out. And then I would say the third piece of all this, Ron, is that I want to be comfortable in doing this transaction, right? Not that I want to have to know every potential acquirer. We're able to do our research, but I want to be able to speak about it intelligently, right? I want to be the best advocate for the owner, for the executive or the entrepreneur. And so I try to take on deals where I can offer some value for them in that aspect.
I got it. So, and you think that's parallel with most of the investment banks that are out there? They're going to want the similar things.
Yes, I believe so. But obviously, you're going to look at different ranges. For example, an elite boutique like Houlihan Lokey or Moelis may not necessarily come down to our level.
Hmm.
But at the same time, I think we all operate a tiny bit differently. But generally, everyone's looking for things like that.
And what would be the upper range? What's the biggest deal that you would be willing to go out and raise capital for and help fund?
There's no upper range. I will not turn my back on larger deals. Larger deals are obviously there's a smaller set of people that can afford it, but easier to defend, right? And I think I wouldn't. I mean, listen, we're working on an acquisition mandate now for a company that's got about 1.7 billion of revenue, and it doesn't matter. And at the same time, we're working with companies that have 10 million of revenue, so it doesn't bother us. We can go large or small.
Okay. One of my favorite questions always to ask is, what is one myth inside of your industry or your profession that you believe that it just shouldn't be out there and you need to debunk it right now?
Interesting. Um, a lot of people say that that you shouldn't hire an investment banker, right? Because it makes you look bad. It makes you look incapable as an owner. And a lot of that comes from the venture capital world, right? Um, and so, not as much in private equity. Private equity actually likes to play brokers fees and things. So venture capital world, they say, hey, you shouldn't come to us with a deal from an investment banker. I think that's just BS. Okay, I think that they want you in the room and they want to work you over. They know that an investment banker is going to represent and advocate for the client and defend them and make sure that the valuation and the terms are adequate and what typically is in the market. And I think that startup companies, high growth startup companies, need to start thinking very wisely and need to start pushing back against venture capital and saying, hey, we're going to hire investment bankers.
It's interesting, and I'm going to tick off some of my friends. I have at least a half a dozen friends that own venture capital friends companies, and I'm gonna say something derogatory here. I think that totally comes out of laziness, and as humans, we're just characteristically lazy. It's a
Mhm,
lot more work to negotiate and work on something when there's somebody on the other side that's as intelligent as you.
mhm,
It's the same thing as inside of our space, the acquisition entrepreneur space. We often say brokers and CPAs kill deals. So
mhm,
we want to source off market deals, and it's
mhm,
because we like to own or finance the deals, and the brokers are risk adverse, and there are a lot of people that won't pay those payments, so they kind of just categorize everybody as no business should ever own or finance their business. And
right,
there's a lot of strategic advantages to it, both tax wise and like if you got a business owner who's trying to retire and he's more worried about having $10,000 a month to live on than he is getting a check and
mhm,
paying taxes
mhm,
on a $2 million transaction, right? Which is capital gains and you know like what did you do with the money, where do you stick it, so now you've got investment fees and all the other stuff on top of it. Whereas if you're just trying to get that because your financial planner said that's what you needed $2 million to
mhm,
retire. You're 65 and you want to make sure you got money until you're 95. You need $10,000 a month to live on that. It's a lot more economically sound for a guy like me to go, fine, I'll give you $10,000 a month until we hit your $2 million valuation, and which I think is a premium to pay for your business because most businesses are overpriced. But I'm
mhm,
willing to do that because if we calculate interest into it, it's going to come around that anyway. And
mhm,
now they're paying income tax or non-capital gains
mhm.
on a yearly thing, and their yearly basis, all their normal yearly deductions come out of that. So
No, agree, agree.
but a lot of people say, brokers will kill those type of deals just because they're number one, they're concerned about who's going to pay their their commission check, and number two, they're risk adverse, wondering, well, what happens if he doesn't pay? And well,
Listen, there are bad investment bankers and there are bad brokers, like any other industry. There's
yeah,
bad CPAs and bad lawyers, right?
yeah,
You've got to find the right people to work with. Let's like, not to brag, right? I'm not gloating, right? Um, when I go to bed at night, it's less about my commissions or my success fees and more about did I do right by that person, right? And that's the way I live my life. That's
yeah.
the way I run my organization, and everybody in my organization will align with that, or they'll be out, right? And that's about it, right? And so that's why I said, you asked the question, how do you approach an investment bank? Interview them, find out who they're about, try to meet them, and see what goes on. You know.
What would you, if you were in my shoes and you were thinking about like starting some big project where you wanted investment banker backing? What would be the selection criteria? What would I already know you want to interview them. You want to make sure there's a personal match. Are there any other indications or any things you would look for to say, yeah, this is probably a good one to look for? Or, yeah, maybe not.
It's a good question. Usually, good people run good processes. But if there was one more to think about, I would say ask them to define their process. Right? We do. We have a process. Okay. Now, you understand M&A, right, Ron? It's never a straight line, right?
Yeah.
But discipline is still needed, right? There's a certain type of documentation that's needed. There's a certain type of way to do due diligence. There's a certain type of way to be organized, right? There needs to be certain goals and objectives and timelines as part of the M&A process. So don't pressure the organization or the investment bank to give you a very hard, strict discipline process, but see if something is in place to guide their thinking. And that's how we operate. Listen, I have so many situations where I have to modify or be flexible with a particular part of my process, or supply some additional documentation that I typically wouldn't have. But there is 75% of it's covered by a process.
So somebody on one of my Slack channels is watching this and he popped up a question. He really wants to me. I got to ask this. So I'll ask you. John over here wants to know personal guarantees when he fills out the paperwork to do all the stuff on any business with the SBA, with the SBA back loans, which only go up to 5 million, I think, in deals
Mm.
size. He has to personally guarantee everything, and basically everything he exists, everything he's ever touched, and his firstborn child. He's wondering, are investment banks as strict on that, or are they more on the finances and structure of the actual company?
So I would assume he's referring to private equity firms, right? The
Right.
ones that invest in these deals. They are not. I very rarely have I heard about somebody looking for a personal guarantee from a private equity firm. What they are going to ask for to see whether you're committed is rolling over equity, right? So say you're going to buy an acquisition. So say you put in $1 million or whatever it is. Say you put in 10 to 20%, right? Um, when a transaction does happen, they're going to ask you to keep that equity in there and roll it over, right, and not cash out fully. Um, but it's important. So private equities are typically infusing cash. SBA is primarily lending money, right? So there are distinct differences, but I would say the private equity rarely does personal guarantees.
And then when you guys fund deals for acquisitions and stuff, are you raising money from private equity or private investors, or using some of your own money, or what is that?
So we don't use any of our own money, right? So it's all we are standing in the middle and we're trying to facilitate the transaction, right? We approach private equity. Um, Depending on the deal, I always insist that the client also approach strategic acquirers, right? You never know, right? Because it might be better to hold 10 or 20% of an organization that's worth 100 million than just go out there and sell it to a private equity firm and not get much growth, right? So it's private equity and it's strategic acquirers. And occasionally, depending on the situation, we will work with private debt funds.
Okay. Well, we're at the top of the hour, man. This like flew by. I love this conversation. I love
Great, great.
we talked about some really new stuff, like how do we start the process with investment banks? Where do they? We talked about just now, like where do investment banks get their money from? And help when they're helping line up deals and stuff. The other thing, the sustainability side of it, I think that's something that is a conversation we've never had on this show, and it's something that's overlooked right now. And I know for myself, I've got some interesting projects I'm kind of thinking about sticking my toes in. That's why I brought up coffee. I'm thinking about buying some coffee roasters, and from the subscription side, ones that are established and actually have people who order on a monthly basis from them. But that sustainability comes in there big time, right? There's a guy here in town. His is run from, like, his family owns the farm raising the beans. His wife's family does. He brings them here to the U.S. He roasts them and he distributes them. And so I'm going to go sit down with him just to learn the industry. And the funny thing is, I don't even drink coffee. I love the smell, hate the taste, but it's just an intriguing business because people are so loyal to it. But I never thought about the ESG side of it. I knew that he had a component, but I didn't realize how critical it was, because the whole point of me acquiring, kind of micro roasting things is to have a brand that has a bunch of them and eventually exit it for something. And I know for a fact in that space, if I exit it, I better have a whole section of my deal room covering the ESG side of it, or I'm not going to get the multiples I would expect to get out of it.
Listen, Fair Trade Coffee logo on a coffee bag in your place is just not good enough anymore.
Right. Yeah.
Okay? It needs a lot more.
It does. I appreciate your time. It's like I said, we're at the top of the hour now. How do people contact you and get a hold of you? What's the best way?
You can best way to reach out to me on LinkedIn.
Okay.
It's obviously right below here, but they can also reach out to me via email. It's my personal email, my personal company email. It's Jacob JACOB at JRGEORGE.com. And we can start a conversation there, and then Zoom, Google Meet, whatever else we need to do.
Awesome. I appreciate it. So for you guys that are on the podcast, when this comes live on that, his link on LinkedIn is his full name. So if you're going to search for him on LinkedIn, it's under Jacob Ronnie, Ronnie, George, spelled normally JACOB RONNIE GOREGE. I realized I did that. But make sure you put his full name in there. You'll find him. It'll be in the show notes. It'll be in the description of all the anywhere you watch this. But if you're driving down the road and you get to your location, you're wanting to connect with him, it is Jacob Ronnie George. I appreciate you being on the show. We're
Thanks.
kind of out of time. I appreciate this. The last question, we always end with this: what can myself or the audience do to help you out, man, to help your business grow and to help you succeed?
Two things. Can I say two things?
Absolutely.
All right. So first one, listen, we've got this new push in sustainability, right? And we're taking the M&A angle, and I want owners and executives to think about where they are as an organization when it comes to sustainability, and any future investment or M&A event that they want to pursue. And I'd love for you to reach out to me, and we'd love to work with you on a consulting basis to figure out what needs to get done. And that's the first thing. And secondly, I would love any of your listeners, if they are considering exiting their business and they feel they have some unique technology or product or whatever it is, and they're thinking about exiting the business, I would appreciate a call and see how we can work together and figure out how your future looks a lot brighter, whether that be retired or part of another organization.
Awesome. Thank you, George. I almost called you George. Jacob, we just talked about this earlier in the show that people call you by your last name, and I
Okay.
glanced up and did it. Thank you, Jacob. And I really appreciate you being here. It's been a fun conversation.
Thank you so much, Ron. I really appreciate it. And I appreciate you allowing me to talk about some things that I'm passionate about.
Awesome. I had a blast. Hang out for a second or two after the show. We'll chat and we'll end the show. Thank you, everybody, for listening. That is the show today.
Bye.
Hey, it's your host, Ronald Skelton. I want to thank you personally for watching the show today and invite you to call our new hotline, 918-641-4150. That's 918-641-4150. Call us and tell us about our show, ask questions, suggest a guest, or even tell me about a business you have for sale, and we'll reach back out to you. Again, that number is 918-641-4150. Call our hotline and leave us some information. Thank you.
The Investors and Entrepreneurs Professional Mastermind. The Investors and Entrepreneurs Professional Mastermind combines the traditional peer-to-peer mastermind introduced first in Napoleon Hill's famous book, Think and Grow Rich, with accountability partnering, where your peers help you ensure that you set goals, take actions, and get results. If you want to scale, blow past roadblocks, and achieve success faster than you might think is possible, I suggest you take a visit over to tiepm.com. That's tiepm.com and check out the Investors and Entrepreneurs Professional Mastermind.